Hey guys, my name is Andreas from the YouTube channel BTC Business Consult. I have the great privilege and honor to be partnering with Amazix in order to be the host for their new series of AMAs with the most exciting and upcoming ICOs that they're currently working with. If you're not sure what Amazix does, they do community management for ICOs. So if that's something you're interested in, make sure you head over to the website, read about what Amazix is as a company. The information will be in the description box down below. In this video, we're talking with Kevin from the upcoming ICO that Amazix is working with called CoinMetro. We have a whole bunch of questions that we're going to be discussing taken directly from the community. Make sure you like this video, comment below, as we'll be doing much more in the future, talking with other clients and AMAs with the current projects that Amazix is working with. Thanks so much for watching. I hope you enjoy the video, and I look forward to seeing you next time on the next AMA video with Amazix. Thanks for watching. Have a great day. Here we are with Kevin from CoinMetro. Kevin, thank you so much for taking some time to talk to us to do this AMA. Hope you're having a great day so far over in Mexico. How's everything going on your end?
Busy. So I believe it's a good day. I can see the sun coming through the door. I've been here since before it came up.
Yeah.
But other than that, it's a good day. And thank you for having me. It's
Sure.
It's a pleasure.
No problem. Glad to be able to partner with Amazix in order to do this AMA to get some information out to the community. So without further ado, because I know you're a busy guy, we're going to jump right into some questions. So question number one from the community is, how and when will we submit the KYC form for the presale?
Sure. So the KYC module will be uploaded at some point between the end of this pre-token sale and the beginning of the main token sale. It's going to be a fully automated process. So we use a company called ID3 Global, who we've also used in the past at FXPig. They have a bunch of automated APIs that not only check for validity of documents, they also check nationwide databases in about 30 to 40 different countries where they can verify address information. They actually verify the passport or the ID card of the driver's license is legitimate. This whole process takes about 30 seconds to 2 minutes, depending on the country you're from. If you live in a country where we have access to databases that can actually pull and verify addresses, all you need to do is upload a passport, driver's license, or government-issued photo ID, and that's it. We will verify the address you entered. If it matches, you're good. If your address doesn't match, or if for some reason you live in a country, or for some reason if you don't live in a country that we can pull that information, at the end of the day, then you're going to need to upload a proof of address document as well. But again, it's automated. So the whole process should take 1 to 5 minutes, generally speaking, and you'll be verified and ready to go.
Awesome. Thanks for answering that. Moving on down the list. So this question has two parts, so I'm going to kind of summarize it. This part says, do we get bonuses for holding? If not, what's there to prevent a massive dump when it hits the exchange? And this question is referencing the white paper where it talks about holding coins will give you discounts using the platform.
Sure. Okay. So as far as the dump scenario, let's say, so we've built in a few different things to avoid that circumstance. First, the 3 and 5 euro cent coin, the first 2 tiers that we've already passed, have built-in vesting. So they have vesting schedules. So when the people that purchase those coins won't have access to those coins for a certain amount of time. After the first 90 days expire, they get a certain percentage. The percentage basically at the price, at a assumed listing price of 15 cents, basically puts them at break even. So at 3 cents, they're getting 20% of their XCM released, and at 5 cents, they're getting 33% of their XCM released at 90 days. Then another 90 days need to pass, and they get the additional percentage released to them. So that's one way that we're stopping. Basically, we want a community that actually believes in our product. Yeah. So we don't necessarily want people that just come in. Speculators are fine. Everybody can speculate. But if you want to speculate, you should speculate 2 years from now, not the first day the coin is listed. That's usually not the best way to go in any market, whether it's IPO, ICO, or whatever. We also, so there was a question there about benefits. As well. So the benefits, the strict benefit to holding the coin, regardless of, let's say, price increase over time, is that yes, there are discounts applied. So once we surpass 100 million XCM sold, 100 million tokens sold, all contributors will have lifetime discounts on CoinMetro and also at FXPig. So FXPig is offering about a 22% discount off their default rate to CoinMetro contributors. And CoinMetro will offer a similar discount, somewhere in the range of 20 to 25% lifetime on all our fees. So our basic default fee rate is going to be 0.1% on pretty much all transactions. That means that it will be around 0.075% for people that contribute once we pass that 100 million coin mark. So that discount goes to everyone, let's say. That's just for buying XCM now, buying the tokens now. But for people that come into the platform later on and they just buy XCM on the exchange, they will also be given discounts. That discount, though, will range based on the amount of XCM they hold. But people that purchase during the token sale can also benefit from that additional discount. So that discount will range somewhere from 5 to 50%. We don't have the exact amounts yet on how much coin you need to hold to get those discounts. Those will come out a bit later during the main token sale. But you will have some significant benefits for holding XCM as well. The reason for that is the more people that hold XCM, the less supply there is. The less supply there is on the market, the higher that equity can actually, the higher the price can actually move because we're pulling supply out of the market. So it makes sense for everyone involved. So yes, aside from that, obviously, I think there's probably going to be some more questions about the future price and things like that. So we'll touch on the aspects of how we're stabilizing the price in the future. I assume on another question here in a little bit in the near future.
Sure, exactly. So just to summarize that a little bit, basically, if people wanted to dump who got in very early, they wouldn't be able to because of the vesting period. And the incentive is to hold the coin so you get cheaper cost of using the platform, essentially.
Correct, 100%.
Awesome. All right. So moving on down the list. What was your experience running FXPig, and how will that help build CoinMetro? And the second part of that is, from FXPig to CoinMetro, has there been any challenges or things that have gotten in the way? How have you overcome them? And then what's been the overall experience going from FXPig to crypto CoinMetro?
Okay, sure. So actually that question should be, how is your experience of running FXPig? Because I still run the business.
That's true.
Has it changed? Well, look, with every business, I've had a lot of businesses, both online and offline, since I was about 16 or 17 years old. So I think all businesses have a lot of things in common. You're always going to see growing pains. There's always crises that pop up, fires that pop up that need to be put out. I think what you learn over time essentially is that nothing is ever perfect. Most things need to be tweaked as you go, regardless of how much effort you put in to make them perfect. So what you should take from that is that you need to be flexible, and you need to make sure that everything, the processes you create, the protocols and the systems you create are flexible and scalable, because you really never know when you may hit a problem. You need to have redundancy. You need to make sure that regardless of what happens in your business, you're able to overcome and move on. So FXPig grew from pretty much having 3 clients, I think, on its initial day one in 2010 before we went public. We're still a niche company, so we've actually never done advertising for FXPig. It's a much different, well, there's similarities obviously, but there's also a much different scope in how we grew the business. Because at that time, FXPig still trades some of its own funds, so we make a good deal of our income off of our own trading. So we never really looked to expand like we're looking to expand with CoinMetro. We tried to keep it very niche. It was more like a close-knit community, so to speak. However, there's a lot of similarities, especially in the tech and other things. I think I'm going off on a tangent, so I'm going to just ask you again. I think the second part of that question was how we're going to apply that maybe to CoinMetro.
Sure.
Or the similarities. Okay, so the similarities are this. Obviously, the sector, very similar. We built at FXPig order management systems, fixed compliant engines, fixed servers, matching engines, a lot of the same components that we will create for CoinMetro. So we have a lot of experience creating those. We know the pitfalls. We know to make them modular and scalable. You'll see a lot of issues right now around the industry with people closing their doors to new clients. not being able to service fiat currencies, not being able to go through KYC in less than a month. All those things really happened because more than likely their system was not modular. They could not scale it without having to pull it offline. And not to mention that they weren't ready with just their general support, the amount of people that they actually employ in their business. So all those things we've been through with FXPig. Even though we're a small company, we've definitely gone through scaling issues, so we've learned how to deal with those. And we have the hindsight of being 2020 in this situation, so we can see what's happening to these current exchanges and make sure that we're adapting to that even before we go to market.
Awesome. Great answer. So next one. This is a bit of a question and an opinion, it seems like. It says, how will marketing be increased as not enough people know about the project? So maybe you can touch on marketing and then what your opinion is on the outreach of the project so far.
Sure. So in 100% transparency here, we have done basically zero marketing up to this point. What you see in growth is essentially FXPig's client base, Telegram, and Bitcoin talk, essentially. The reason why is, well, experience. So when it comes to pushing a marketing campaign and then scaling, first you need to make sure you're stable, secure, and ready to take on that demand. So we created this token sale platform just for the token sale. So we didn't just place an Ethereum address on our homepage and said, send your money here. We actually spent some time and some money creating an actual platform. So this platform is new to us. Obviously, we have talented developers, but that doesn't mean you don't need to test, stress test, beta test, and everything. So one of the reasons why we offered 3 and 5 cent coin and XCM to the community was that I think there's a misconception in the community that these type of prices don't usually exist. Well, they exist on pretty much every ICO. If you're a whale or a dolphin or a larger investor or a private individual, you get access to these type of prices pretty much on every single public ICO. I found that a little odd, considering that most token sales try to push the community aspect, but then they give prices to private funds and individuals that they don't give to the community. So we opened up those prices to the community, but there's a caveat to that. The caveat to that is you're kind of a beta tester initially. You're testing out the platform. We're making sure it's stable. So we gave ourselves about 2 weeks to go from the opening of the sale, going through beta testing, slowly releasing feature sets and slowly releasing patches to make sure that we're stable, that all our databases are ready for the push, ready for the big wave of clients once we click the marketing on. So marketing is actually scheduled to go from the 10th to the 12th of January. That's when it's going to kick off. Once that happens, you will see a major increase in visibility of our project on Facebook, on Google, things like this, AMAs and interviews, articles that will be released to the press and things of that nature, as well as we will be going on tour. So we have a bit of an Asian and European tour where we'll be hitting conventions. I more than likely will be speaking at 1 or 2 of those events. So everything will start to commence shortly. But again, we in business, at least in my view, in business, if you try to be the hare rather than the tortoise, a lot of times you step on your feet and you fall. So making sure that everything is perfectly in line is very important to me. And if you do that, the money will follow. So the contributors will follow, the success will follow if you make sure that everything is as perfect as it can be before you actually launch.
Sure, sounds good. Next one. This says, it seems like South Korea will expand KYC by requiring a linked bank account. Will this be part of your KYC process as well? Basically saying, will you at some point have to prove that you have a bank account linked to the name or address or anything like that?
Well, obviously that specific legislation is South Korea. So that specific legislation is for exchanges that are based and regulated in South Korea. So that specific regulation would not apply to us in Estonia or the country of Georgia. However, regulation is expanding. One of our key basically ideas behind the project here is to be very progressive on regulation. So the one thing we don't want to do as a community is not get involved in regulation. I know initially, and I've been, let's say, in the community for quite some time. I think I mined my first Bitcoin on an iMac in 2013, late 2013. So I've been around for a while. I wish I would have kept those Bitcoins, by the way, that I mined.
Yeah, I was just going to say, hope you held on to them.
Yeah, well, I have a few, but I should have kept the bulk.
Yeah.
Anyway, the community really needs to get involved in the regulation. So initially, Bitcoin was like an anarchist society. So everybody was against regulation. They were against, actually dealing with the government and things like that, which I can understand to a certain aspect. Obviously, privacy. I like my privacy, so I can understand the privacy aspect. But when it comes to regulation, to see mass adoption in this market, we need regulation. We cannot sidestep it. We cannot try to hide from it. Any major exchange currently that isn't regulated, when regulation hits, is going to have a major issue, because I guarantee an audit, when it hits, will be, let's just call it a nightmare. Outside of that, we need to be. So our goal is to be progressive. We will rapidly expand the licenses that we obtain. We will rapidly look to expand that regulation footprint, one, for banking, and two, to be ready so that even if a jurisdiction we have a license in doesn't have a crypto license, let's say, from day one, we're going to speculate on the fact that they are going to include crypto in a license that currently exists, maybe a derivatives license, an futures license, some type of license, right? So that's what happened with the Forex industry, and I believe that's what's going to happen with crypto. So to answer that question without going too much on a tangent on this regulation, because I could talk about this for hours, what we're going to do is basically this. We will not require that from day one, because none of the regulations we will be housed under initially will require that. However, as we expand, if we expand, let's say, and attain a license in South Korea, then if you're a South Korea resident, you will be required to link a bank account. At the moment, South Korea does not restrict its clients from trading on other exchanges, to my knowledge, outside of South Korea. And if the exchange is outside of South Korea, it would not require you to have a linked bank account, at least right now.
Sure, that sounds good to me. Rolling along, this says, in terms of differentiating, why restrict to the main coins only? Why are you not going to have a segment for altcoins also? And I'm assuming that means on the platform. Maybe you can touch on that.
Sure. If the person was referring to the token sale, that's really just for logistical reasons and the fact that it becomes difficult, plus volatility. There's a lot of volatility in the normal coin and token market, say Bitcoin, say Ethereum, where we could receive contributions at a 900 euro per Ethereum, and tomorrow it's at 600, and obviously we take that hit initially. Altcoins can be more volatile. But for the token sale, obviously we stick to the top 5. I assume, though, you're right, we're talking about the exchange. So that's actually somewhat inaccurate, because we are going to expand to many, many other coins, tokens, and altcoins. The way the rollout will work is this. So the beta rollout for the exchange is scheduled for the end of March, right around the time that our main token sale ends. We will have the top 5 guaranteed. Why is that? Well, we already have them built into the token sale platform. That token sale platform will basically morph into our wallet platform once we open the exchange. So that's a given. So sometime between day 1 and day 30, we will have the top 10 and then the top 20 coins or tokens by market cap from CoinMarketCap. So we will work. Now, the reason why there's not an exact date there is because of this. It's a beta launch. So usually when you launch a beta launch, you don't launch all feature sets, because obviously you want to test. And if you launch 35 feature sets into a platform on a beta, not a good idea, because to get to the actual production launch, it's going to take 3 to 5 times longer, because you're going to have too many bugs to track initially. And if you have one bug in one side, that bug could translate into bugs across other services. So you want to make sure that you condense as much as possible. So that's why 5 coins. But if our alpha launch is able to basically get rid of most of the bugs, or when I say bugs, I don't mean serious bugs. What I mean is a UI issue. Maybe you click on a button, it doesn't lead somewhere. Maybe you enter in 10 on the platform, and for some reason you're buying 0.1, etc. So those things, if we get through those in the alpha, which I suspect we'll get through most of them, then we may have the top 20 coins from day one. We may have time to, because before we list something, I want to be able to have the wallet ready. I want people to be able to deposit and withdraw on those tokens or altcoins as well. One, because if we list the coin, the people behind that coin or altcoin need to actually provide liquidity to the platform. Well, they don't need to. It's optimal, though. So if we list an altcoin, if they can put 10 million or 5 million of their altcoins into a margin deposit on our exchange, that means it's liquid. That means it's not illiquid. That means that the price may actually rise on the exchange rather than fall if the demand is there. Or even if there's some supply, some sellers, it wouldn't just fall immediately because there's actually liquidity there. So those things take time. So the schedule puts us out to 20. Once we get to the top 20, we basically open up a vetting and a voting mechanism. So people will be able to vote, and people will be able to come in and ask for their token or altcoin or coin to be listed, and we will vet these. So our exchange will basically have 3 tiers: tier 1, tier 2, tier 3. Right? So tier 1 will be a market cap of X minimum, and it has to be vetted, meaning that we're going to go through a process to make sure that there's stability. We're going to check volatility. We're going to check all other exchanges. We're going to check liquidity on the market. We're going to make sure that listing this coin is not going to be detrimental to the coin itself based on the liquidity in the market. Okay? Nobody's really doing that now. There's really no price discovery in the market. When we talk about bringing a bit of maturity to the market, that's kind of part of it. Then tier 2 would be a market cap of, let's say, Y, also vetted. Tier 3 would be either, we're kind of debating this right now, either unvetted, or it would just be coins that just came on the market, really no market cap whatsoever. And then we may also have an unvetted tier. So we will eventually have hundreds and hundreds and hundreds of altcoins, tokens, and coins. That's the goal. We also will have an ICO Express platform, which obviously every ICO that gets listed there, or anybody that uses the smart contract creation tool, whether they're tokenizing an ICO or an asset, it's going to get listed on the exchange. It may also get listed on the ETCF platform that we have. So these things will take time. You don't want to put 300 assets on a new exchange day one.
Yeah.
You don't. For liquidity reasons, every single one of those will crash. It just doesn't make sense, even for the actual coins themselves.
Sure. I think that sounds very clear the way you explained it. So next question, this says, as a greedy investor, what's the value of the token you see post lockup period? And how will the burn rate as described in the white paper tie into that?
Sure. So I knew this question would come. I'm surprised it came so late in the AMA. Okay. Look, I told you we like to follow regulation. We want to make sure that we're compliant in every jurisdiction we possibly can be. If I give you a price right now and speculate, that can put us into a gray area of being classified as a security. So I can't do that. What I can do is kind of skirt around a bit the issue, and I'll give you a few bullet points here, and then give you an example from somewhere else. Okay, so that's the best I can do. Even in private, if someone were to ask me, because I know I'm probably already getting private messages as I say this, I can't. Speculating is illegal, actually. I know a lot of ICOs do this, but a lot of ICOs do a lot of different things that they shouldn't be. And while they may not get hit for it now, if they actually do launch a business in the future, I as the owner or of that company would be nervous. Let's just put it that way. So here are my bullet points. So yes, we have a three or four pronged approach on how we're going to basically look to stabilize the XCM value over time. The first one of that is our token buyback program. So a lot of you are familiar with Binance. Binance has a token buyback program. I don't know the exact specifics, so I'm not going to comment on theirs, but there's a similarity there, I assume. So our token buyback program works as such. We take 20% net profits from FXPig as well as CoinMetro. And we package those profits into a reserve account every quarter. We will then monitor our market price, XCM's price, on our own exchange. And as we see that there is too much supply in the market, so there's a lot of sell pressure, we will begin to buy, basically put up pending buy orders into the market to stabilize the price so that the price doesn't, let's say, fall. Obviously, from day one, that reserve is not going to exist. We need a quarter to actually put some funds in that reserve. So this specific aspect won't be there day one, but by day 90, we should have something to throw into that reserve, right? But that's the first step. Then we have the key. I think this is key. This is key here that I don't think anybody else is doing right now. Maybe after we release this, somebody might start doing it, but we'll see. Maybe I should patent this idea before we mention it here. So here's how it works. Basically, all fees that are charged on CoinMetro will be charged in the underlying asset you're trading. So if you're trading Bitcoin, Ethereum, or Litecoin, your fee, that 0.1%, will be charged in Bitcoin, Litecoin, or Ethereum. However, CoinMetro does not accept anything but XCM for its fees. We have to be paid in XCM. You don't have to worry about that, however, because in parallel, as soon as that fee is charged in Bitcoin, let's say, for example, it gets pushed to the exchange as a buy order for XCM. So if that fee of 0.1% Bitcoin, let's say, was 0.00025 Bitcoin, that 0.00025 Bitcoin gets pushed to the exchange as a buy order for XCM, a market order. It buys XCM, and then we get paid in XCM, and we burn a percentage of that fee. So depending on the size of the fee, we will burn anywhere from 0.25 all the way up to I believe 33 or 50%. I actually have to check my own white paper on that one because I've thrown around a lot of numbers, but it's one of those numbers. I apologize. I think it's 33%. I could be wrong, but whatever it says in white paper, that's the number. So we will burn that number. So every single transaction that happens on CoinMetro's platform will increase the demand for XCM on our exchange. So if you let that rattle around your head in a bit, as the usage of the platform accelerates, the demand accelerates, and the supply dwindles as we burn percentages of those fees. So basic market mechanics tells you this: when supply is dwindling and demand is rising, there's only one thing that can possibly happen: the price rises. If you look at Binance, and I'm just going to give this example. Now, I don't have coins in Binance. I've never used Binance. I know who Binance is. I've read up on them. I've seen their website. I've messed around with it a little bit, but I'm not a client of theirs. Nor would I even consider ourselves that much of a competitor because we have so much of a multifaceted approach here. Obviously, they have an exchange. We have an exchange. In that aspect, we're similar. Competition's great though, so no bad blood for Binance. But Binance did release their token. They have a token buyback. They do have a burn schedule. And there you can look at their token price, where it started, where it is now. And then add in the fact that we have a multifaceted approach with investment angles, with ETCFs to provide liquidity to the ERC20 market. Add those things into perspective and think about how much more of a push to the price that may induce, and you can get an idea of where we suspect the price of this token will probably be in the months and years ahead.
Sure, I think that covers it very well. Here's a quick question: will there be an airdrop of tokens?
So we didn't plan an airdrop, but I do think sometime between now and the end of the main token sale, what we're going to do is organize some shared airdrops. And I'll give you a little. So this might not be that short of a question. I'll give you the short version here. Our ETCF. It's a very important piece of the platform. To me, it may be the most important piece for several aspects. The ERC20 market needs liquidity. The reason why we even talk about dumps is the fact that as soon as an ERC20 token goes on the market, most ICOs say, oh, we're going to get listed at these 15 exchanges. And then most contributors say, wow, that's great, 15 exchanges. In reality, from a market perspective, that's horrible. And I'll tell you why it's horrible. Initially, you're an illiquid token. You have no liquidity backing your token whatsoever, other than maybe tokens that you're holding as a reserve. And then you spread that illiquid token to 15 different locations where the only thing people are going to do day one is sell it. So you're having sell pressure at 15 different locations. So if at one location you have a very illiquid and there's more sellers than other places and it falls 20%, everyone else sees that other location fall 20% and they jump on the sales where they are. They start selling because they don't want to lose that 20%. Then you have a 30% fall at another exchange and a 35% at another one. And you just get a snowball effect. So ERC20 tokens need liquidity. They need it from somewhere. So that ETCF is going to provide that liquidity to a certain extent, because investors will come in and say, oh, look, I can get on a healthcare an ETF style aggregated basket of assets in the healthcare industry. Now, maybe in that healthcare industry, there's 3 or 4 or 5 tokens that have done super well. And that's what these investors see. But maybe your token from your ICO that just launched, that hasn't done that well, is also basketed in there. So when that client buys that token, they're buying your token as well. You get some liquidity. So what we're going to do with that product, is we've already started to do, is we're looking at ICOs that are currently in ICO. We're looking at ICOs that are coming, that are going to be an ICO, and we're going to find ones we like, and we're going to offer ETCF listings for free to these ICOs. In exchange, we're going to ask them to do airdrops of their token onto our Telegram group. And in exchange for that, we may also airdrop some of our tokens to their customers. So I believe we may see some airdrops, maybe not even, maybe of our token, but also of other tokens in the future, probably during the main token sale. So stay tuned for that. Stay tuned in Telegram. We'll make updates when we get closer to that and when we think that's going to happen.
Sure, that sounds good. So yeah, that was a longer question than I thought, but an excellent answer, and that's a really great point that you come up. So the next question, going back to how you mentioned further down the road, people being able to vote on tokens, this basically says, are you worried about pump and dump groups coming in and voting in a certain token and then pumping it and dumping it on the platform? And do you have a strategy to prevent this from happening?
Well, it's, again, with illiquid assets, it can be difficult. One, you can't manipulate the market. That's just, well, I should rephrase that. You can very easily manipulate the market, but as a transparent exchange, we will not manipulate the market in any way. However, yes, there are ways we can. One, we're going to vet every single token that we allow to be released on our platform. So if a token comes to us and they're brand new and they haven't listed with us through our ICO Express, because at that point we would have vetted the team and everything else involved in that ICO, so we'd have a better idea of who we were dealing with, we will vet that token. So going through the vetting process, we will check the team, we will check the market cap, we will check trading on other exchanges. If it's not listed on other exchanges, we will ask about the token economics of that token. How many tokens they have released, what their market cap currently is or what it will be. We will get all the details we need to do an analysis of that token. If there are red flags that we feel mean, for instance, a red flag to me, just as an example, would be someone that created a token, they went through an ICO, the ICO was not that successful, they want to put the token on our exchange, they want to provide no liquidity to that token, and at the same time, they want to make sure that they have the ability to trade their own token. That would be a red flag. That's an easy one to spot, but just to give you an example, that would be a red flag. So the vetting process will help immensely. We will also monitor our exchange. So just like, let's say, the NASDAQ or the FTSE or the DAX or any major world market has what they call circuit breakers that they can switch on and off when they see suspicious activity, we will do the same thing. If we see activity coming from 3 IP addresses in Russia, China, and wherever else, that might be blacklisted on certain IP lists around the internet, then we may choose to halt trading on that token until we can figure out. Now, those are extreme measures. Those we wouldn't take lightly. This is not something we would do. Obviously, we want tokens to gain in value. That's great for our exchange. That means more volume. That means more fees for us. We're a business. Obviously, we want to make money. But we also don't want notorious things happening in our exchange. So there's no way to prevent against this 100%. It's kind of like saying, I'll give you a Forex example. I know I'm a little long-winded. I apologize for that, but I like to answer things thoroughly. So the SMB event, which was the National Bank of Switzerland, January 15th, 2015, and I'll tell you why I remember that date in a second. The Swiss National Bank pulled the peg from the euro. The Swiss was pegged to 120 at the euro. They pulled it. That caused the Swiss franc to basically gain, I don't remember the exact percentage. It was huge, 80, 90, 100, I don't know. It was the Swiss franc to the dollar went down to like 20 cents on some exchanges. If you had the smallest position you can possibly imagine on a trade, on any Swiss franc pair, you lost and you went negative by hundreds and hundreds of thousands of dollars, euros, whatever. So those type of things. Now this is a mature market we're talking about. The Forex market is 1978 is when I think is the exact date when the initial Forex market actually went to a non-fixed rate. Before that, all currencies were fixed on a daily rate at 5 p.m. New York time. 1978 that changed. We started to do fluctuating rates. So it's a pretty mature market. It's 40 plus years old. Well, I think it's 40 years old this year actually.
Yeah.
So that's a mature marketplace, and we still couldn't stop that from happening. You had brokers go out of business 3 days after that because of that SMB event. I'll tell you though, FXPig, because I'm sure that would come up as a question, FXPig had 2 clients go into a negative balance, and we lost about 20,000 US dollars. And the reason why we were able to not lose millions, which FXCM, a big broker, lost, I think, $600 million. Oanda lost about 40 million. They were huge losses. And the reason why is that in October, prior to this, we limited leverage on those pairs to 20 to 1 because the writing was on the wall that the Swiss bank at some point was going to need to remove the peg because that peg was costing them lots of money due to inflation in the EU and the EU zone. Anyway, all these things come into play. So market maturity is a big thing that'll help us in certain aspects, but no one can stop these things from happening to a certain extent, but we will do everything we can to make sure that we put stops in place, filters in place to try and stop most of these type of pump and dump schemes.
Excellent. Good to hear. So the next question, this says, the white paper mentions transparent third-party audits. Are you going to have that just for Bitcoin, for other altcoins, for fiat currency that you may or may not accept? Can you just touch a little bit on the entire audit and transparency side of the exchange?
Sure. So as a regulated exchange, because from day one we will have a minimum of 1, probably both licenses approved by that point, and we'll be looking for others, audits are obligatory. You need to be audited. So everything will be audited. That means that everything from our crypto balances to our fiat balances to our bank accounts to our expenditures, everything, including security. So we will have security audits on our servers. Everything will be audited, and those audits will be made public. Certain audits, now, for example, off the top of my head, and usually I'm pretty good with this, but off the top of my head, Estonia, under their alternative payment licensing and the brand new crypto to fiat exchange license that got packaged into the alternative payment license on November 27th of last year, I am not exactly sure the auditory responsibilities on the crypto side. Let's put it this way. What we need to make public will be made public. What we aren't obliged to make public, we will still make public for the most part. And I say for the most part because of one caveat. One caveat is this. Some jurisdictions require salaries and things like that to be public. I have no problem publishing my salary. Today, it's 0. So there you go, public, 0. That will change, obviously, but right now it's 0, so there you go. I have no problem publishing mine all the time, but we may have secretaries and support staff and things like that that do not want their salary published. So if these things are not obligatory under the regulation we sit under, those things we may not publish. We may publish, we more likely would publish an overview, something around the line of salaries Q1 X amount, something like that. But we will look to be as transparent as possible. Again, sometimes for security reasons, some things you don't want to be public. You know, there are certain things that you might want to keep under wraps or maybe just give estimations. Again, some things may be public or private for shareholders, and the reason being is security, to be honest. For instance, yearly turnover at some point, unless it's necessary to be made public, which in some jurisdictions it will be, that's for sure. But you know, there are certain things. People want to have security in their lives, in their private lives. You know, I don't want somebody trying to kidnap me on the street, for example. So there are certain things that may remain private for certain reasons, but we're a transparent company, so we don't have anything to hide, so we will make things transparent as possible.
Good.
I think there might have been one. Oh, there was just something you mentioned at the end of that question. I'm sorry. Was just it was if and you accept fiat. So we will be a fiat to crypto exchange from day one. So a little bit there. Banking is. There may be a banking question coming up, but I just want to cover this real quick. Banking is very difficult. That's why you see most crypto exchanges do not accept fiat. To me, an exchange that doesn't accept fiat is not an exchange. It is on, I guess, the true definition of exchange. You're just exchanging something, but you can't have mass adoption without fiat. Fiat is not going anywhere for a very long time. And when I say that, fiat may become digital. You may have a US dollar on the blockchain, a pound on the blockchain, a yen on the blockchain. But that fiat base, my lifetime, your child's lifetime, not going to happen. It's too instilled in the way that the entire world does business. Will it go digital? More than likely, yes. I'm on the boat that says we will be digitalized. There will be blockchain type software, but fiat's going to exist forever. But banking is difficult, so the banking footprint will expand over time. But from day one, we will be a fiat and crypto exchange.
Okay, perfect. So this is a longer question. Apparently, the Bitcoin cards from TenX, BitPay, Bitwala, and Wirex stopped working.
I know where this is going already.
Okay. It says, was CoinMetro planning to use WaveCrest as well? If so, how will you prevent something like this from happening in the future?
Okay, so if I actually had a few conversations with some clients and colleagues a few months ago. And hopefully one of those will pop up to say this is true, so people just don't think I'm trying to pull everybody's leg here. But I got the news about the master issuer in MasterCard and Visa in the EU about 4 months ago, sometime in August or November, that they were going to be pulling the plug on all crypto in early January because of MiFID II regulations in Europe. To be honest, and I don't want to sound arrogant here, and sometimes I come off a bit arrogant, I can understand that, but it's just, I have to be straight with people, and the straight fact is, MiFID II, which is regulation in the EU that governs financial institutions and transactions, has been planned to come out now for 2.5 years, just about. It's been about 1.5 years in the making, and they've been saying it's coming out now. I mean, it's been known, and it came out on January 5th. And when did the news come out about Visa? Let me see. January 5th. The reason is because MiFID came out, and MiFID does not allow crypto to be. So there's rules now that it doesn't specifically state crypto, but there's many different rules there about AML. And here's the problem: most exchanges will allow people to post right now. If you're just dealing in crypto, you have to give no AML, KYC, nothing. Visa and MasterCard won't touch that with a 10-foot pole, because I'll give you an example. MasterCard will fine a business, I believe it's $50,000 just for having the verbiage of their card incorrect on a website. So you can imagine the fines when you are not doing AML and KYC. So WaveCrest basically was forced by MasterCard to cut those programs because WaveCrest did not force those programs to install AML and KYC for the most part, and they were offering branded products to crypto, which MasterCard does not allow. Now, there are only 2 or 3 other places where resellers, let's say, because you can't go to MasterCard direct. You can. Let me rephrase that. You can go through companies like Wirecard, who actually are a master distributor of MasterCard, and I believe Visa as well. Don't take my word on that one. I might be misquoting there, but I believe it's Visa as well. You can go to them and set up a direct platform to MasterCard. However, this takes about a year and a half to set up. The costs are pretty extraordinary, and the AML and KYC on MasterCard's side is ridiculous. Which means I'm not saying we wouldn't pass, and I'm not saying other companies like TenX and everybody else wouldn't pass. But it's such a strenuous process, and the fact if you have any type of like Bitcoin imagery, crypto imagery, you mention crypto on the image of your card, they won't accept it, at least at this point. So you have to go with a third-party reseller like WaveCrest. I'm not going to mention the name of the third-party reseller we're using, it's connected to the same. We have a card at FXPig. It's connected to that card issuer. One of the reasons that we're able to actually issue a card is because we have experience with this main card issuer. If I mention their name, they probably get a lot of business, but I'd rather keep it under wraps just because we may be the only card in town when we launch, or one of the only cards in town. So I've already talked to them pre-January 5th to make sure that they're not affected. This card is from a MasterCard master distributor in the Caribbean. It's not through Choice Bank, if anybody's wondering, because that might come up as a question as well. It's through other banks. It's also, they do have other banks outside of the Caribbean as well. They will accept crypto. The one caveat is the card is black. That's it. No logos, nothing. It's just a black card. Outside of that, they know we're a crypto business. They have accepted us. We've gone through all the KYC and AML, and our card program will launch on schedule.
Excellent. Glad to hear that. So moving on down the list, token buyback program. What actually happens when the platform buys back the tokens? You already touched on that a little bit. And the tokens that don't get burned, do you keep them in a vault? Do you put them back in circulation? How exactly will that work when you take your fees in the native token for the platform?
Sure. So the reserve we have for our net profits is the same kind of reserve we'll have for that token buyback. So we will have a cold wallet, air-gapped cold wallet, where all the tokens that come into us will sit, and the tokens that we buy back using our reserve. Now that reserve can be fiat, it can be Bitcoin, it can be anything we hold as a reserve, and I'll tell you how that happens. With our net profits, it's fiat, so it's euro. However, let's give an example here that we use that token buyback money. We basically will just place pending orders or market orders in our exchange, just like anybody else would that buy XCM. So no difference there. Obviously, we would use our API, our REST API. We wouldn't do this manually, but those orders will just hit the exchange. And then when we actually match with an order and we buy the token, that token goes into that air-gapped reserve account to hold tokens. If at some point we need to sell those tokens to stabilize again the market, because let's say we get to a point where the demand is high enough where all our fees that are coming through, the tens and thousands of transactions that are happening every day, there's not enough token on the exchange to facilitate those exchanges for those fees. Then we take the tokens that we bought and we influx them back into the exchange, okay, and then those get bought with Bitcoin, Ethereum, whatever, and then we put that Ethereum, Bitcoin, whatever people are buying those tokens with, back into the reserve. So our reserve initially will be, let's say, euro-based, but over time that reserve will start to become based on multitudes of different tokens, altcoins, and currencies as the full cycle starts to happen between those reserves, between the buyback and between the reserve of tokens in case we need liquidity. So there'll be a closed loop. Think of it as the Apple to the Android system base. This is the Apple system happening here. It's just a closed loop back and forth between those reserves.
Okay, so this next one is worded a little bit strange, so work with me a little bit. Will the native token be mandatory in using the CoinMetro platform for adoption? Do we have to first deposit fiat, then buy the coins, and then use the platform? Or can we deposit Bitcoin, buy the coins, and then use the platform? It's a little confusing.
I think I get it. I think I got the question. So you don't need to buy XCM to use the platform because the fees that you're charged will be converted automatically to XCM. However, you can buy XCM with fiat, altcoins, whatever you want to buy it with. On the exchange, we will have multiple crosses. Not every altcoin, because obviously we're not going to list a very extremely volatile altcoin against our own token, because it wouldn't really behoove us to do that. However, there will be multiple options. So every option that exists, fiat, your top coins, your top tokens, you'll be able to buy XCM with those on the exchange and then hold XCM to get the discounts that come from holding XCM. At that point, if you're holding XCM, then every single time you actually make a fee transaction, rather than hitting the exchange, we just pull the XCM from your account. You can have an option, actually. We will give you the option. So there'll be a button to tick. Do you want to pay fees from your balance, or do you want to pay fees from the exchange. If you're holding the balance and you'd rather pay there, then it'll just come right out of your account. It won't go to the exchange, vice versa. You can choose, you can pick or choose. But so you don't have to buy XCM to partake on the exchange to use it, but you should hold it because it'll give you discounts on your fees.
Okay, sure. Thanks for clarifying that. Appreciate it. So this is a good question, and it's a little long-winded as well. Since you'll be putting an effort in keeping fees low, are you worried that people will flock to the platform just for cashing out? So for example, people who have never deposited or used the platform will just put a whole bunch of Bitcoin, convert to Euro, and then pull the Euro off of the exchange into their bank account. Do you think this will hurt your liquidity, and do you have a plan to counter this sort of action?
Sure, that's actually a great question. There will be like circuit breakers involved in this as well. So for example, you'll have an aggregate volume of how much you've traded. So if you deposit, let's say 10 Bitcoin and immediately try to withdraw it, you would not be able to. You would have to trade a certain amount based on the deposit amount. So if you influx 10 Bitcoin onto the exchange, you will be required to trade X% of that Bitcoin or X times that Bitcoin in margin trading before you're actually available to pull it to fiat. You can exchange it to other tokens based on, we will basically have a running, this is something we learned from FXPig. So margin management is key in FX as well. So let's say, for example, in the FX industry, we have 15, 16, 17 different liquidity providers where we need to hold margin or credit. We have an aggregation system where orders are sent to those different liquidity providers. We need to make sure, however, that we don't get overloaded with orders at one specific liquidity provider, or we get margin calls, and then we lose money. So we have a system in place there that basically checks every 2 seconds every single trade that's open at every single liquidity provider, checks the margin, makes sure that we're stable, and if one starts to go outside of certain parameters, it then transfers trades to different liquidity providers. And that same type of system will work here. So we will constantly monitor what we have available in certain tokens. So in situations like this, if someone tries to move to a different token and then withdraw, there will be a warning message previously that says that they haven't yet meet their minimum trade amount, and that if they do exchange to that specific token, they would only be able to withdraw X amount of that token. So yes, we will have something in place and those rule sets, because basically this all boils down, and I talk about this a lot with other things, to protocols. A lot of exchanges a lot of businesses run into problems because they don't follow basic protocols. Most of the hacks, quote unquote, you've seen are due to protocols. So somebody has a private key on a machine, they're at a hotel lobby, they log on to check their email, somebody gets into their computer, finds a private key, and that's it. Somebody leaves a private key written out on their desk and leaves it at work. Somebody has a private key listed in their cell phone, and they pull it up when they're on a bus or a train. These are the type of things that happen, or they email sensitive data back and forth, or they put it on Dropbox or Google Drive, and somebody gets into one computer that's listed to that Google Drive and gets in the information. All those type of things are also protocols. So it's important for a company to have protocols. So here, these protocols are rule sets, and over time, those rule sets will adapt. Right? It's difficult to have every possible scenario inside a rule set initially, but from the FX side, we have some experience in these type of things, so we will apply different rule sets. And then over time, we may get caught once or twice and say, this guy, this guy figured out a way to skirt one of those rules, You give that guy a pat on the back, and let's change the rule set. So these things do evolve over time, but we have experience, like I said, in creating these type of rules. So yes, there will be filters in place for people that try to take advantage of our low fees, and there will be other rule sets in place to make sure that a normal client who comes on, deposits 10,000 euro, tries to trade a little bit of Bitcoin and says, this isn't for me, and then wants to withdraw their euro. That's fine. No problem there. They can do that immediately. There's no filter there. They're fine. And so those rule sets, again, will morph over time, but yes, we will be prepared for these type of certain situations.
Okay, so coming almost to an end, we got about 4 or 5 questions left. What are your benefits over other main exchanges, and do you plan on marketing and becoming the main #1 exchange, or are you content with a low market penetration? Their words, not mine.
Okay. So I guess I'll take it up. So differences or similarities or differences between other exchanges. So the exchange, we are an exchange. That's correct. However, we're much more than just an exchange. So I don't believe currently on the market there's actually a multifaceted financial platform that deals with as many different financial products that we are planning to deal with. So in that aspect, I don't know. I think that differentiates us immediately. I think it allows us to get into so many other people's screens, so to speak. I think it amplifies so much. Being a crypto to crypto exchange, because many exchanges out there are crypto to crypto, limits your adoptability to about 2% of the world population. That's the estimate right now of how many people know what crypto is. Now that's probably high. That's high to how many people actually use an exchange. That might be way less than 1%. But just to give the benefit of the doubt, let's say that 2% is accurate. Now, if you add in ETF style investments, money manager investment, asset manager investments, that increases your scope to about 20 to 30% of the global population. Know what a asset manager is, or know what some type of ETCF, mutual fund, some type of investable security is. So right there, I think it changes the game a bit. We know that futures has changed the game a bit. Before futures came out, we had ETNs. Those are electronically traded notes. I could explain to you the difference between an ETF and an ETN here, but I don't want to bore everybody on this call more than they may be already, or on this AMA. So essentially, they're very similar. They're very similar products in most aspects. But so those type of things already exist. But to me, that misses the crypto assets. To me, are so much better packaged in other asset forms than futures, ETNs and ETFs, something more like a mutual fund, something more even like a derivative to me would even. So there's so many other products, and these products are all things we'll be looking at. Not to mention that we're going to be progressive on atomic swaps and off-chain transactions. So we're going to be offering things that these guys don't offer and that they don't want to offer, and I'll tell you why most of them don't want to offer. Atomic swaps are essentially free. So, an exchange that's currently making $2 million a day on charging 0.2%, which is outrageous. Just to give you, I mean, again, I like to go off on tangents, so sorry about this, but just to give you an idea, another comparison to the Forex market. In Forex, 20 years ago, you would pay somewhere in the realm of 500, $1 million when you traded. That's 0.05%. It's 20 years ago. Or sorry, 0.5, 0.05%. Nowadays, you can get for 0.005%. That's 50 per million. Crypto charging 0.2 is 2,000 US dollars, euros, whatever, per million traded. That is insane. And the worst part is that there's no reason to charge that much money. Why? Because they're not paying liquidity providers. It's all matched liquidity. They're paying absolutely nothing. They're not even paying the makers on their exchange, which, by the way, we haven't mentioned here, but we will pay makers on our exchange. That means if you push a pending order, a limit order, onto our exchange, when it gets filled by a market order, you are paid 50% of the fee we charge. So just let that rattle around for a bit. They're not paying anything. So these type of things will definitely differentiate us. So as far as where we want to go, what our goal is, let's say, as far as market penetration. In our white paper, we talk about 1 to 2% market penetration. The reason we talk about that is because I believe, and I don't want to misquote myself here, but I believe that comes out to about 200 to 250,000 euro a day in profit. Even at that level, you're already a pretty robust business in this space. That puts you probably top 20 exchanges, because the top 5, top 3 actually do the bulk. That doesn't mean we're not going to push to have more market penetration. That doesn't mean we're not going to spend money on marketing and outreach. And that doesn't mean we're not going to expand our service list to include all types of other services over time that will expand our adoption rate and our reach. What it means is that, am I content? Am I content to have a business that is pulling in $3 million a year net profits, and that is XCM value may at that point be in the fixed figure range and not in the cent range? Would I be happy? I'd be happy. Would I be content? Maybe not. I never set a goal, because to set an ultimate goal, I set a lot of goals. I set daily goals, monthly goals, weekly goals for myself, for my companies, for my employees, for everybody. But I don't set a goal. I want to be number one in this industry. No, that's not really a goal of mine. But expanding the business and making sure that we do the best we can to make sure that we penetrate the most amount of market penetration we possibly can, and expand our services so that we truly are the one-stop financial shop. Again, our fees are going to turn out to be much lower than everywhere else. So a TenX or another type exchange may make more money than us, but we may do a lot more volume. Because we're starting out at 0.1. Over time, that's probably gonna change. So 0.1 to me is still expensive, but I have to be honest with you. I'm a transparent guy. So from a commercial standpoint, we couldn't go lower day one. We could. But from a commercial standpoint, I want to see a little bit of rapid growth here, and to have that rapid growth, we can't go so far outshot of the market. The market right now is 0.2 on average. 0.1, which I believe Binance may charge as well, is a gift right now. It's a gift. So we're going to match what they charge, but over time, it's going to go lower. So again, the Amazon type pricing schematic. What we want to do is we want to grow to the point where we can offer you the cheapest price possible and still be a profitable business with a monster market share. That's the goal.
Excellent. Sounds good. Next question reads, will the token supply fund decrease in size together with the token burn, or will it grow relatively bigger since it stays at the same amount of tokens while the overall supply decreases? That didn't make any sense to me.
I get where they're going. I think I get the question. So, sure. I'll give you a little quick math here, quick grammar school arithmetic. So we have a token reserve of 100 million coins set in our white paper. So those 100 million coins are our reserve, yes. However, that reserve is, like I said, is going to be in a closed loop. So that reserve, when we need to sell those coins on the market for whatever reason, for liquidity reasons, will then basically those funds we sell them for will go into our fiat or our token buyback reserve. So yes, that token reserve can fall, because if we have to push 20 million to the exchange in order to push up liquidity for whatever reason, then we only have 80 million. But those funds that get brought to us by actually selling those tokens go into our token buyback reserve in either fiat or Bitcoin or whatever. So the value between the two should relatively stay the same. What happens is the influx, so the fees we charge, the fees that get paid to us in XCM, that is where the burn comes from. So we burn part of those fees. So if we're supposed to be paid, let's say 10 XCM, and we burn 30%, that means we get 7 XCM, but that's still going to increase the overall reserve. So it's still the reserve will always increase, even though the overall supply is decreasing. So at a point, that reserve will could become 51% owner of all XCM. At that point, we would probably institute a mandatory burn of all those tokens, a portion of all those tokens, because we never want to get to a point where we own 51%. That's not in the white paper. To be honest, this is a pretty good question. I applaud the person that sent this out. Somebody put their thinking cap on today. So yeah, we never want to get to that point. So there would be a mandatory burn at that point to reduce the overall amount that we have, and that would more than likely push coin value quite high, or XCM value quite high.
Sure. This next question reads, Can you elaborate a bit more on stabilizing the market in terms of when no one is selling the CoinMetro tokens? Are you going to go in there and sell yours? If no one's buying, are you going to buy them? Just how exactly, in a brief overview, is the overall market stabilization going to work?
Sure. So basically, the end of that question was exactly how it works in kind of layman terms. Essentially, the reserves are there. We will monitor the XCM price. Obviously, initially, like I said, the reserve will be empty on day one. So day one would kind of be the best time to actually have it in place. Obviously, when a token, again, ERC20 tokens, illiquid by nature. That's how they're designed. When it goes on, when it initially gets listed, it probably will fall a bit. That's how markets work, because most of the people that come onto the market initially are going to be on the supply side. They're going to want to sell. Those are going to be the guys that bought in at 7, 9, 11 cents, 12 cents, whatever, 13 cents, and are just looking for a quick profit. Or whatever, they put money in that they should have used for their mortgage payment. Sometimes people do things they shouldn't do with their money, and those type of people may need to jump on the exchange to sell their coin. So initially, you would see the price fall. But let's say a situation like that 6 months down the line, where we see that there's a lot of sell pressure for whatever reason. Let's say the coin is now trading at 80 cents, just to give an example. And a lot of people that bought in at 3 and 5 cents are now like, oh man, I want to get rid of half of this because I want to see a quick profit. Okay? So we start to see a little supply hit the market. And we say, well, you know what? We look at our charts, we do some technical analysis, we do some liquidity analysis, and we see that there seems to be a lot of support, or there's going to be a lot of support around the 50-cent area because there's a lot of pending buy orders at that area. So we're going to go ahead and support that area as well. So we push in a pending order or pending orders around that 50-cent mark, 60-cent mark, wherever we see that there's already a base of pending orders from our clients. And we stabilize the price around that level. Once the supply eats up the demand and demand continues, then the price rises again. Basic market mechanics. So think of it for people that, I know I talk about this because I've been in this business for a long time, so supply and demand comes natural to me, but I'll give you a very simple idea what supply and demand is, just for people that are listening. So you go to the store and you want to buy some apples. You're an apple lover. So you go to the local market and you say, hey Joe, I want 40,000 apples. I'm hungry. And Joe says, I got 33,000 apples for you. And some guy in the street goes, well, wait a minute, I can get you 7,000 apples. So the guy in the street, though, to get those 7,000 apples, because he knows you want them, isn't going to charge you the 30 cents per apple that Joe charges. He's going to charge you 38. And you really want those apples. So you throw out a market order. A market order basically means, give me 40,000 apples, and I don't care how much they cost. So you eat up those 40,000 apples, but you don't pay 30 cents. You pay the aggregate of the 30 and the 38. That's essentially how supply and demand works. So if there's no, if you're trying to sell, if Joe said, I want to sell 500,000 apples, and you say, I only want 40, well, you're only going to buy 40. He's still trying to sell 460,000. That means that as new people walk into that market and go, I want some apples, I want some apples, I want some apples, well, that apple price stays like this. As soon as people break through, though, now they bought those 500,000 apples, and now they want to buy 500,001, that price is going to rise. Why? Well, because Joe now knows that people still want those apples, so the price rises. So that's the general idea behind supply and demand. The market works exactly the same way. So if, again, I'll repeat what I just said just so everybody can now get that into context. So price is at 80 cents. Price starts to fall because a lot of people come in, they want to sell at 80 cents. We look at our exchange and we see that a lot of our clients have pending buy orders at 60 cents. So we know that once that 80 cents hits here, it's going to have to eat those 60-cent orders before it can fall further, right? It has to eat that demand before the supply can fall over. So we just pad that demand, so the supply keeps hitting until the supply stops. All that selling stops, and there's still some demand here. There's still people buying. We're still buying at that 60-cent level. What happens at that point is the price starts to rise again. So that's how we will support. And on the other side, same thing, same caveat, just backwards. If we see that there's a lot of buy orders and no sellers, then we will go in and find a place where some sellers sat before or where they currently sit, and we will add in additional sell orders for those buyers so that there's liquidity in the market.
That was a really excellent answer. Thanks so much for explaining. So we've been going for a little over an hour now, and the final question for tonight, it basically has to do with somebody saying they're not very comfortable with transferring tokens back and forth between wallets and exchanges. Is the CoinMetro platform going to offer a sort of cold storage multi-currency wallet so that they could put coins on the exchange that are safe and then pull them from a controlled cold wallet that you own into the market exchange and then back off again?
Okay, so I would say yes and no to that answer. So the first question, so the 5 main tokens which we currently offer now, well, except for Ripple, which we haven't included in the token sale as of yet. Well, I know the whole Ripple idea is, I don't know why I brought this into the conversation. Now I have to explain it. So we haven't brought in Ripple because, well, Ripple's kind of like the anti-crypto right now. Though we do have people asking us about Ripple. So we're kind of taking an internal vote right now, and we'll probably put it on Telegram to see if anybody wants us to add Ripple. Ripple is included in the BitGo wallets. We more than likely will include it on the exchange because obviously there is some demand, not because we like it. Look, an exchange doesn't list things because they like them. They list them because there's volume and there's market cap and things are vetted. So the 5 or 6 tokens or coins that BitGo allows will be there from day one. BitGo has, and we utilize, a cold, warm, hot, receive, send wallet infrastructure. Basically, that means that we have wallets. When you send like in the token sale, for example, when you send funds, you're sending it to a specific wallet that was given to you. We are reusing Ether wallets, but we have a specific internal tag. It's just a different piece of technology. However, normally you're going to get a brand new wallet every time you do a payment. That wallet basically gets tagged to you. That wallet is a receive wallet. Money can go into that wallet. It can only leave that wallet to one other wallet, which is our warm wallet. It can't go anywhere else. So even if someone were to hack us and get our private key, the only thing they would be able to do is move those funds from the receive wallet to the warm wallet. That's it. Then the warm wallet can only hold a certain amount of funds that we can use to send to our send wallet, which is a wallet that can only send to one specific address. And then from the warm wallet, we keep the majority, 95, 96. Right now we keep 100% in cold storage. Every time a transfer comes in, we batch it out and it goes into cold air-gapped storage. Okay? Obviously on the exchange you can't do that. Why? Because, well, you wouldn't have any liquidity to pay out. So the warm wallet then holds a certain percentage, and that percentage will fluctuate based on usage, but it's still a multi-signature wallet, and it can only send to a send wallet. And the send wallet, the rule set will change as we send out. So before we send Bitcoin to you, for example, we would include your wallet into the send wallet rule set. We would send out, then we would erase your wallet. So it's a pretty complex and a pretty secure system. Now, that means that basically your funds are always in cold storage, even though it's our cold storage. Now, there is an option with the Bitcoin APIs to give cold, well, not cold, but like a warm or a receive wallet to clients. And I believe we are going to do that. It's not 100% quote unquote cold, but you can set rule sets to make sure that if anybody were to get into your account, the only place they'd be able to send that Bitcoin is to your external Bitcoin account. So they pretty much can't do a thing. Especially if you institute 2FA and voice biometrics to trade authorization, then they can't even trade. So even if they got into your account, brute force through 2FA, voice biometrics, and the other security protocols we'll have in place, they still wouldn't be able to do a thing. Now, we do have to create our own wallet system for every other coin that BitGo does not allow. So we are currently looking into the fact of how exactly we're going to do that. I think right now, I'm not going to say it's in the planning phase because it's not. We've already actually drafted out documentation. We've already began coding the base. Right now, our main team is actually focusing on the exchange, and the team that's actually doing the token sale, along with an external team, well, internal to us, but an external team from that team, will be focusing on converting that. Actually, this week, converting the code on a secondary server to the main wallet code. So right now, all that's kind of happening. What we're looking to do is create our own wallet infrastructure and lace that up or combine that with BitGo's. So we'll use the same cold wallet and warm wallet technology. We'll just create our own receive wallets and our own send wallets. So this way you would basically create your own wallet in our system. Now, a wallet like for your cell phone and a wallet for like an actual wallet for XCM, that's not something we actually put in the roadmap, but now we're starting to think that it might be a good idea. So we may actually add that in as well. What I can tell you is that we also are looking into get a insurance policy on our cold wallets. So I can't guarantee that at this point. I can't guarantee we'll get the insurance. Obviously, we have to get underwritten. But if that does come to fruition, you're basically holding your Bitcoin or Litecoin or XCM or whatever inside our system would mean that 90-some-odd%, 95, 96, 97% of your funds would always be in cold gap storage. The other percent would be in a warm wallet that can only send to one specific wallet that can only send to a specific rule set of wallets. So it's about as secure as it can get without you putting that information, carving that information into a rock and throwing it in the middle of the ocean and tagging it with a GPS signal only you can find. I mean, that's pretty much the thing. But this will evolve. So we're going to see how we evolve that to see if we can actually provide some type of third-party wallet service. That might be a good service to add onto our service offering. So I'm going to add that onto my to-do list, and that may be something that we look to do in the future.
Awesome. Well, that was an excellent answer. And we're actually at the end of all the questions that came out. So, Kevin, I just wanted to thank you so much for your time. For me personally, this has been very enlightening. I've been watching your project a little bit, but not super duper involved. So now that you've answered all these questions, and I'm sure that people are very interested in the project even more now, can you give us a little bit of background about just some general token sale information, some dates, obviously the website address so that people can go to it. If you're not a part of the Telegram or their community, the links will be in the description down below, so you can click on those, check them out. So Kevin, can you give us a couple sentences on the overview of the project in terms of token sale, how to contribute, and that sort of thing?
Sure. So the address for CoinMetro is coinmetro.com. It's pretty easy. Right now, we're already into our third pricing tier on the pre-token sale. So our pre-token sale kicked off on December 21st as a whitelist. We kicked off, the whitelist is not required, by the way, to actually get involved in the pre-token sale. We did that just as an initial setting to basically streamline the process for ourselves on our end. The actual website kicked off, I think the 27th was the first time we allowed contributors into the website to purchase from the website. So it's been online for roughly 10, 11 days. We're currently at the third tier, so we're at 7-cent coin. As far as the progression is moving, it looks like we're going to get into the 9-cent category within 24 to 48 hours. So if you're looking to purchase at 7 cents, you should get over to coinmetro.com as fast as you possibly can. Little plug there. The token sale will end, this pre-token sale will end on the 21st of January. And then we have a month gap before our main token sale starts, which will start on the 21st of February and go out till March 23rd. So we're floating the idea of some type of innovative kind of bonus system throughout that month where we may offer specific days of the week, hours of the day, where we may offer access to coin before the sale for the last price. So the 9-cent price, let's say, which will be the last price before the pre-token sale ends. So even if you have to buy some Bitcoin or buy some Ethereum, or you're trying to get involved in the token sale and the timing just isn't right, make sure you check those Telegram links because there may be an opportunity in between that month. You may have to be, lightning fast with your trigger finger to get into some of those offerings, but we'll make sure that we update on a daily basis. And that's it. So, and also, just one caveat: marketing will kick off here in the next 3-4 days. And we have done no marketing, and we've been able to go through about 60% of the pre-token sale already with almost zero marketing. We have a little bit of brand awareness on Google AdWords, but no real marketing push yet. So when that happens, I would expect this to close out pretty fast. And on that note, if our contributors that are listening to this, thanks for contributing. Welcome aboard. And you know, I'll be pushing for that. For success, for sure. I'm 100% committed, and I thank you guys for being committed, and I thank everybody for asking how they can support and help us. And I think I'm going to be jumping on Telegram in the next few days to ask for some Reddit moderators, or for some maybe moderators on other things. So get ready for that too, if you want to actually help out and help us get to the next level.
Awesome. Well, good. Kevin, again, thank you so much for your time. Again, people, my name is Andreas from the BTC Business Consult YouTube channel. It has been my pleasure, my honor to partner with Amazix to bring you this awesome AMA session with Kevin from CoinMetro. Make sure you like this video, leave your comments what you liked about down below, share it with your friends. As we said, join the Telegram, get involved with the community. All that information is in the description box down below, and we will continue to be bringing you these AMAs right here on the official Amazix AMA YouTube channel. Make sure you subscribe. Kevin, again, can't thank you enough for your time. I really appreciate it. Best of luck with the token sale, and I'm sure we'll be in touch soon.
Thank you, Andreas. Thank you very much.
Talk to you later. Bye.
Bye-bye.